Hello everyone, this is Manjula Devi P, working as Assistant Professor in GFGC Kanakpura. In this session, I would like to discuss about accounting treatment for assets and liabilities with reference to impairment, which is described in IND AS 36. So, we will see according to IND AS 36, what is impairment, how to calculate impairment loss, and when the companies do the impairment review of their assets and liabilities. Anyway, the objective of this impairment is mainly considered with assets. So, here IND AS 36 prescribes the procedures that an entity has to apply when they are carrying out their impairment review of the assets. What is the meaning of impairment review? Impairment review means at periodic intervals, usually companies wants to know if in the books of accounts, if the assets are shown at more than their recoverable value, or like according to the prudence, they don't want to show the value of the assets more than its actual worth. So, what is their actual worth as per IND AS 36? Okay. So, here in this they have given certain concepts of the value of the assets, and then they prescribe at what value the asset has to be shown. Okay. Before we see what is impairment loss, we need to understand certain basic terms, those are used in this IND AS 36. First and foremost, very importantly, we have something called as carrying amount. Carrying amount is nothing but the book value of the asset. Book value means cost of the asset minus its accumulated depreciation. That will give you the book value, which is also called as carrying amount. So, here in IND AS 36, they term that as carrying amount. Carrying amount is the actual value at which it is shown in the balance sheet. Then we have something called as, okay, before we go to recoverable amount, I would like to discuss about fair value and value in use, and then I will go to recoverable amount. So, what is fair value? Fair value means the value at which the asset can be sold in the near future, in the arm's length of transaction. What is the value that the asset can fetch if it is sold? But we have to take care if there is any selling expenses involved with the sale of the asset, we are supposed to deduct it. Then we get the fair value of the asset. Then we have something called as value in use. Value in use means the present value of the future cash inflows that can be generated by the use of the asset. Suppose if there is a machinery, what is the cash inflow that can be generated by the use of that machinery, and which is converted into present value by applying a discount factor, and if we sum it up, then we call that as value in use. Now, I would like to take up the recoverable amount. Now, we got to know fair value and we got to know value in use. Recoverable amount means the higher of fair value and value in use. Means suppose if we get the fair value as 50,000 and if we get value in use as say 60,000. So, then what is recoverable amount? The higher of these two. Fair value is 50, value in use is 60. So, value in use is considered as the recoverable amount, or in any case whichever is higher. Sometimes the fair value might be higher, sometimes the value in use might be higher. Whichever is higher, fair value or value in use, that is called as the recoverable amount. Then the last one, most important one, which is impairment loss. So, according to IND AS 36, impairment loss happens if we are showing the value of the asset or the carrying amount of the asset higher than its recoverable amount. So whatever the difference between the carrying amount and the recoverable amount, it is called as impairment loss. Only if the carrying amount is higher than the recoverable amount. For example, so in the example I was giving, if fair value is 50,000, value in use is 60,000, then I consider 60,000 as the recoverable amount. In the same case, if they were showing that particular asset as 70,000 as the carrying amount in the books of accounts, then we have to calculate impairment loss by comparing the carrying amount and the recoverable amount. Carrying amount is 70 in this example, recoverable amount is 60. That means we are showing the carrying amount higher than the recoverable amount. Then in that case, there is existence of impairment loss. So impairment loss is equal to carrying amount minus the recoverable amount. In this case, it is 10,000. So let's see with some of the examples. Yeah, I was talking about calculation of impairment loss. You can apply this formula. Impairment loss is equal to carrying amount minus the recoverable amount. What is recoverable amount? It is the higher of fair value and the value in use. And while calculating the fair value, we minus if there is any cost of disposal involved. Okay. So according to recording the impairment loss in the books, so here whenever there is an existence of impairment loss, whenever there is a impairment loss recognized, at that year that should be charged to statement of profit and loss as an expenditure. Then the value of the asset has to be reduced in the balance sheet to that extent. That means in the previous example what I was quoting, so the carrying amount was 70, recoverable amount was 60. So the difference between that was 10,000, which was impairment loss. So that impairment loss will be charged to statement of profit and loss, and asset will be shown as 70,000 minus 10,000, that is 60,000. So the impairment loss reduces the value of the asset in the balance sheet to that extent. Let's have an example. So we have an example here. Sony Limited is carrying out an impairment review of machinery on 31st December 2014. The carrying amount of the machinery is 1 lakh. If it is sold at present, it can fetch up to rupees 70,000. So they have clearly given what is the carrying amount and what is the fair value. Then let's see what is given further. Budgeted information concerning net cash flows that can be generated from the machinery for the next 3 years has been provided by the marketing department. So 2015, 35,000, 2016, 30,000, 2017, 25,000. Then the current cost of capital is 10%. Calculate the impairment loss if any. And they have given the discount factors at 10% for 3 consecutive years. Now by seeing this information, we have to check if there is any impairment loss present in the example. So first and foremost, we have to have say 5 components, or at least 4 components has to be calculated. Then we can see if there is any impairment loss or if there is no impairment in this example. So first thing is, we need carrying amount, we need fair value, we need value in use, and we need recoverable amount. So once these 4 components are identified or calculated, then we can see if there is any impairment loss. The first thing is carrying amount, means the value at which the asset is shown in the balance sheet right now. So they have given that in the example, it is 1 lakh. So the carrying amount of the asset is 1 lakh. Then we have fair value. So fair value is also given in this example, which is 70,000. They say that If the asset is sold at present, it can fetch 70,000, which is nothing but the fair value. Then we have value in use. So, in the example nowhere it is given. So, that means we have to calculate it. So, when we are calculating, we have to consider the cash inflows and the discount factor. So, we are converting the future cash inflows into the present value, and then we are calculating the value in use. They have given the 3 years cash inflows and the respective discount factors. Once we multiply this, we get the present value of cash inflows. So, here 35,000 into 0.909 will give us 31,815. 30,000 into 0.826 will give 24,780. Then 25,000 into 0.751 will give 18,775. Then the total of this is 75,370, which is nothing but the total value in use. Then the next step is calculating the recoverable amount. What is recoverable amount? It is the higher of fair value and value in use. So, in this case, value in use is 75,370, fair value is 70,000. If you compare these two, so which is higher? The higher is 75,370. So, in this case, recoverable amount is 75,370. Once we get this, then we can calculate if there is any impairment loss or not. So, as I said, impairment loss happens if we are showing the carrying amount more than its recoverable amount. So, in this case, the carrying amount was 1 lakh and the recoverable amount is 75,370. Yes, of course, there is an impairment loss happening here because we have been showing the carrying amount more than the recoverable amount. So, if we compile it, so 1 lakh minus 75,370, so we get an impairment loss of 24,630. So, usually in the exam this comes for 6 to 7 marks, usually a compulsory question which you can expect. But anyway, you have to understand the basic idea or logic behind it. The logic is they don't want to show the assets at more than its recoverable amount or at more than its actual worth. If there is any excess amount shown as a carrying amount, that has to be reduced and assets has to be shown at its realistic value. So, there is one more example, okay, same thing, they have been given the carrying amount and its fair value and the cash inflows that can be generated, and the cost of capital is given, and they are asking you to calculate the impairment loss. So, we have followed the same procedure. First calculated the carrying amount which is given, then taken the fair value, then we have calculated the value in use, then compared the fair value and the value in use, whichever is higher. In this case, fair value is 90,000, value in use is 1,07,915. So, we are considering the higher of it, which is 1,07,915. Then we are comparing the carrying amount with the recoverable amount. So, of course, in this case also carrying amount is higher than the recoverable amount. So, there exists an impairment loss. So, if we compile 2 lakh and 1,07,915, we come across an impairment loss of 92,085. So, that amount will be charged as an expenditure in the statement of profit and loss, and the asset value which was shown as 2 lakh will be reduced to that extent and it will be shown at 1,07,915. Okay. So, if we have a recap, if we take the recap of whatever we have discussed. So, impairment review is done at regular intervals in the companies. That interval could be every year or at any major incident which is happening, or maybe otherwise also they may carry out regularly. So, the basic idea is to show the assets at its realistic value. So, what is impairment loss? It happens if the carrying amount is greater than its recoverable amount. What is recoverable amount? It is the higher of fair value and value in use. So, then whatever the impairment loss which is recognized will be charged as an expenditure in the statement of profit and loss, and to that extent of impairment loss, the asset value will be reduced. Hope the concept is clear to you. IND AS 36, which describes the treatment of impairment review of the assets. So, these are the further references which you can use for getting the concepts more clear and for having more examples. Okay. Thank you very much. We will see in the next video. Thank you.